Lately, I've been getting requests for index universal life insurance policies on children. So I thought it was about time to make a video on that topic. This is almost identical to the 529 or IUL video, with some added accumulation possibilities at the end. Would you rather be invested in the red line or the green line? The red line is the market strategy, or your 401k, IRA, or 529 plan. And the green line is the index strategy, or an IUL. With an IUL, you choose an index like the S&P 500. Your money is not invested in the index, so it's not in the stock market, but you get the return based on the movement of the index. Your child's money grows however the index performs, up to a limit or a cap, for example, 12%. Now, if the market grows 15%, your money will only grow up to that 12% cap. But the trade-off is complete downside protection from market losses. So just like you would have a cap, you would also have a floor of 0. So the worst thing that can happen is you get 0 interest in market downturns. In other words, your child would lose nothing ever. Indexing gives you the ability to grow your money at a decent rate, historically 7 to 8% annually, and be protected from market downturns. So let's take a look at this chart again. You can see how volatile the market was between 1998 and 2013. You can see that when the market goes down, you get 0 growth because of the floor. You lose nothing. You can also see that if you had your child's savings in an index product, they would have lost nothing in the last recessions and would have been ahead versus a 529 plan. Because this is a life insurance policy, your child would have access to the death benefit tax-free while alive in the event, God forbid, something should happen to them like a chronic, critical, or terminal illness, for as long as the policy is in force. And keep in mind, Index Universal Life Insurance is permanent life insurance. So your child can keep this for the rest of his or her life to save for their own retirement someday, instead of or in addition to a 401k or IRA. With an IUL, their retirement income would be tax-free. One of the powerful concepts behind an IUL is the ability to access your cash by taking participating loans from your cash value to finance your child's college education, a car, an engagement ring, whatever they want. Because they are actually borrowing from the insurance company, they are using the cash value as collateral. So even though your child takes out a loan, that money is still in their account and keeps earning interest. Let's say your child has $100,000 in cash value in their policy, and they decide to take out a $20,000 policy loan to pay for their tuition. Let's say the insurance company charges them 5% on the loan, and the market went up 10%. That loan didn't cost your child anything. He or she actually made 5% on the money they loaned themselves. If you are interested in buying an IUL, it's important you understand how participating loans work. So make sure to watch my video up there, and I will put a link to that below. So an IUL contract can be used for educational purposes or for anything. You get market-like returns with no risk to stock market downturns. Your child money grows tax-deferred, and withdrawals are tax-free as long as they take participating loans. There are no annual contribution limits, no age restrictions. Your child will get a death benefit and living benefits. And life insurance is based on risk, so the chances of a young child dying is very low. Thus, the cost of insurance is extremely low for children, and the fees are limited if it is structured properly. And to understand the importance of a properly structured IUL, you must watch my video all about that. And I will also put a link to that below. And there are no financial aid calculations like a 529 plan has. Let's say you want to set up an IUL policy for your newborn child, and you immediately start contributing $100 a month into the plan. Immediately, your child will be covered by over $300,000 of permanent life insurance coverage with living benefits. At age 3, your child will have accumulated over $5,000. By age 15, over $26,000. By age 26, over $53,000. By age 34, over $100,000. And if your child does not access this money, their IUL is conservatively projected to hit $1 million in cash value by the age of 65. And that's only with $100 a month into the plan. They could turn on a tax-free income stream of $75,000 per year that will last them the rest of their lives, no matter how long they live. An IUL is the most flexible savings vehicle for children on the market, and the best time to start saving is as soon as possible. If you would like for me to structure an IUL policy for your child, please click on the link below and complete the application. And as usual, if this was of value to you, please give me a thumbs up and subscribe.